auditors wouldn't be traveling to California?
They may, if they don't have a third-party report,
Okay.
then the auditors may want to go and count it and see it. But if you've got, like 1,000 different customers using your 3PL, you don't want 1,000 different auditors coming in. So you hire your own auditors to do the control test and give that report to your customers so they can give it to their auditors. Saves a lot of time and money. Good question. Other thoughts? Other things you've been just pondering over in your spare time? Dying to know? Burning audit questions?
It's on the test.
Yeah. There's a buzzkill. So it's going to be everything we've talked about so far. It'll kind of start into what you've been doing with SUA. More of the terminology you were learning along the way, source documents, little special journals, most of the general journal. So I've got maybe a handful of questions on that. Nothing particular about Nancy or Ray or any of those people. Doesn't really matter what they do, what they don't do. We'll get to that. Then we'll get into the accounting profession, what it's all about, what we did with professional standards, the opinions, independence. I only have a couple questions on today's subject matter, nothing too crazy. So it's only a 40-question exam, each is worth a point and a half, and it'll be a nice little introduction to my tech. So not too many materials so far going into it. Should be a nice little, get your feet wet, figure out how I test. All multiple choice. All right, well, let's get started on today. Just a reminder, we talked about the need for controls, looked at the fraud triangle, that'll be on there too. Difference between the types of misstatements, fraud and error, dealt into fraud, misappropriation, manipulation. Because the bad stuff could happen, the some of these errors in the fraud, and we end up with something we got to do about it. That's the control framework. That's COSO. Find out the Treasury Commission, consisting of 5 organizations, created this monster, this thing, this lovely and cute. Had you think about memorizing the face of it, which are the elements, control objectives, risk assessment, control activities, info and communication, monitoring. We're recognizing that each one kind of feeds the other. We've got the right people with integrity and ethics and good governance, accountability, lines of authority, that's the control environment. Then we can say, all right, we've got the right environment here. Now let's step back and think about, in that environment, what can go wrong? What are the bad things that could happen? Principally down the reporting line for us. Knowing what those risks are and what can go wrong, so we can then develop and implement control activities, which is kind of where we're starting to head. That's all done through an accounting information system, an ERP system, a way to collect, process, and report information electronically. And then, of course, we have internal auditors or others that are constantly checking in on those controls, feeding it back into the control environment. So if you look at the blue line, the control activities, I had you, it's kind of a nice high-speed review, isn't it? Just go right through. I had you think about 5, maybe even 6 control activities. The 5 I had you hone in on were segregation of duties, authorization, the audit trail, safeguarding assets, reconciliation, review, and analysis. We'll get to IT controls as the elements of information systems, information communication. But the basis of all of the controls, those control activities, the foundation is the segregation of duties. Some things you'll see in your career relative to fraud and errors are mostly the things that happen because they're just before segregation of duties. Or override, that's the kind of the paramount thing that tends to happen. So foundationally, if you don't have that, none of the rest of what we have here will matter. It's really hard to enforce authorization of a transaction if you don't have people separated, because somebody could authorize, as we found with Kozlowski, right? He could authorize his own transactions. Nobody was reviewing and reconciling and checking up on him. So that's one aspect. You might have somebody that authorizes their own stuff. Another one you tend to see a lot of, yeah.
But with the Kozlowski case, the actual disbursements for the company did have some segregation, but he found a way around it through the loans, through the internal loans. So he would charge some things, some of which would be personal,
Right.
and then when somebody goes back and checks and says, hey, this was personal, he would say, oh yeah, you're right, I forgot that, let's, back that out. And so it ended up just being corrected,
Yeah.
and sometimes not corrected.
Yeah, I'm not sure how many times it got corrected.
And what he found was a way around this segregation of disbursement.
Because he was the man.
Because he was the guy.
Yeah, he was the man. And, many times he would basically, on a piece of paper, authorize, go buy this cheesy yard, for this apartment that we're gonna use for the company. And after, several hundreds of millions of dollars that went into it, his personal expenses and things that just didn't make any sense for the organization, the jurors found that, yeah, okay, this guy was basically stealing money. Call it what you want, he called it authorization, said everybody before him was doing the same thing, but really, there should have been other people in there authorizing what he did, and nobody in their right mind would have authorized that. So they didn't have the checks and balances. The other thing you're gonna see in your careers, you can count on it, is collections theft. So this would be whoever's getting the cash. Let's say the accountants get the cash. The accountants have the vantage point of being able to get into the GL system to record entries, record transactions, erase transactions, whatever happens. So from a segregation of duties perspective, if the same people are taking custody of assets, they can touch the cash, the collections, the disbursements, and can get into the GL system and make changes, then obviously they can make it go away, and it would go undetected largely. Disbursements is another example of that. It's the people who can create vendors in an accounting information system, who can record transactions with those same vendors that might be false, print checks, have checks signed. If you start mixing up all those duties, you start making it the same person, it's very easy for somebody to commit theft with disbursement of funds. So authorizing your own transactions, stealing the collections, stealing the disbursements, just going to the bank and wiring funds to your own account, making it go away in the GL. All of these become examples of misappropriation that might be occurring in an organization. But then there's the wholesale manipulation. So, we talked about this before. If I'm going to cook the books, usually that means I either have access to the system and I can go in and create transactions or journal entries. One method would then be to start creating thousands and thousands of customers and transactions that don't really exist, making it look like the sales occurred, so the auditors would have a lot of detail, but they didn't actually occur. And that would be manipulation. At the top side of that would be journal entries. I don't want to bother, I don't have time to create all those thousands of journal entries. Let's go ahead and just have a journal entry, one big one, and one big $80 million entry, credit sales, debit accounts receivable, and hope the auditors don't figure that out. That's rare. Auditors find that pretty quickly because the subledger doesn't balance to the general ledger, right? The detail doesn't tie to anything. So journal entries tend to be one of those spots where that might happen. The financial statements themselves, you hear the stories of a CEO that just gets the financial statements and says, nope, cross that number out, change it to this one, cross this one out. Here, make it balance, and some dummy accountants that say, okay, yes sir, make that work, just whip it up, just like you said. And now they're party to the fraud. So that's somewhere between override, which is almost uncontrollable, and segregation of duties. If you give that CEO or CFO the opportunity to go into the system and give them user access rights to create accounts, post journal entries, employees, then that's a pretty easy way for them to commit fraud. Errors, I'm going to show you a video in just a second here that might bring this point home a little. But errors themselves come into play here unintentionally. Folks might have a segregation of duties problem where they're posting, recording, but they make mistakes. Put an extra zero in where it doesn't belong. Again, unintentionally. They didn't mean to harm anybody. They weren't trying to pad their own pocketbook. But it happened, and because they're reviewing their own work, they're doing their own reconciliations, sometimes it's hard to see, you've heard this, the forest through the trees, right? So you're already kind of down in your own detail. Maybe you try to correct it, you try to reverse it, but you reverse it the wrong direction, thus duplicating the error. That happens a lot of times. And you kind of look at it, so I fixed that, there it is. But you don't see that the debits and credits are going the wrong way. So when you go to reconcile, you think it's right, but it's wrong. Whereas maybe if somebody else came in, took a fresh look, tied some things out, they'd see that you didn't correct your error appropriately. Actually duplicated it. So again, these are all places where under segregation of duties, you may want to have some of those separated. And we'll get into some theory and some practice and methods as to how to do that here in a second. But override can be quite a concern here as well. And who you give access to in the system becomes a big deal underneath IT controls. Let me show you Screwsheet. Screwsheet is a very interesting case. You guys know who this is? Did I show you this? I didn't show you this. We've got Kozlowski, but not Screwsheet. I'll test you a little bit on Kozlowski, but I won't on Screwsheet. Because I've already written the test anyway. This is Health South. You guys remember Health South at all? Have you studied it in other classes? I hope not, because that was still my thunder. I know what this class is about. Nobody has time for what I teach. They get to teach their own crap. Screwsheet, 60 minutes. There we go. Okay, Richard Screwsheet was the founder and CEO of Health South, a company that started very small, similar to what we saw in Tyco, and serviced, put out clinics, mostly physical therapy clinics, sports injuries, and then just started growing like crazy, buying up, small clinics and healthcare facilities. And his fraud was mostly related to manipulation. So there's no misappropriation here like you saw with Kozlowski. This scheme was entirely around changing numbers, trying to meet analyst expectations. He would go to Wall Street, and I don't know if they showed in this one, but they have him on camera talking about where the stock should be, where they expect it to be, how he's going to push the company so it gets there. And then, of course, when they weren't quite getting there, you'd have the CFOs get it the rest of the way. Somewhat collusion, somewhat override. The CFOs having access became a segregation of duties issue. So you see the melding of all of these problems, all of this opportunity coming together at once. Again, opportunity is having lack of controls. That's what we're seeing in this case.
A crook. You know that. You are supposed to be a crook. You know that. The SEC, in effect, says you are. Your former financial officers, chief financial officers, say you are. Richard Screwsheet inflated earnings and betrayed his stockholders, betrayed his employees.
There's no evidence of any of that, and many of what people have said is not true.
He told us his top financial officers committed the fraud without his knowledge.
You have to rely, you have to trust people. You have to believe, you have to delegate. I mean, you hire them, you pay them their salaries, you expect them to do the right thing. And I signed off on the information based on what was provided to me and what I was told.
You say you didn't keep track of the account.
CEOs don't do that. CFOs do that. Chief Financial Officer means he is the chief financial officer.
Here's how the SEC describes what it calls the scheme, your scheme. Each quarter, Health South senior officers would present Screwsheet with the company's actual earnings, and he'd compare them to Wall Street expectations. If the actual results fell short of expectations, Scrushy would tell his management to, quote, fix it by recording false earnings to make up for the shortfall.
That is not true.
This is the federal courthouse here in Birmingham where Richard Scrushy's fate could be determined. The prosecutors, as is their custom, wouldn't talk to us on camera before trial, and they would not let their witnesses talk to us either.
Not right now, Jim.
So far, 15 former Health South employees have pled guilty, including all 5 of Scrushy's chief financial officers. Scrushy says they did the dirty work behind his back, but the prosecutors say that when the CFOs pled guilty, they agreed to testify under oath against Scrushy. Michael Martin, chief financial officer. Let me read from the court transcript when he pled guilty. The judge asked Michael Martin, did you and Mr. Scrushy discuss the fact that the numbers contained in the filings were false? Yes, sir. Did Mr. Scrushy direct you to do something with the numbers? Yes, sir. He told me to inflate the numbers, to fix the numbers, so that they met Wall Street's expectations.
So is Mike Martin just a dummy? Just some guy says go do something to commit a fraud or a crime that will put you in jail, and Mike Martin just does it? You don't believe that, Mike. I would never have done that. He is not telling the truth.
Tad McVeigh, CFO until early this year, 2003, pled guilty, told the judge Richard Scrushy was aware that the financial statement contained numbers that were incorrect.
This is, again, it's not true.
All these guys are liars, and you are knight in shining armor.
Mike, there are 50,000 people. You have 5 people that have made these claims out of 50,000 people. Let me make a comment.
But you're in charge. I mean, come on, you are.
Doesn't mean I'm
Team Richard.
No, I did not. No, you're not right.
McVeigh told the judge you tried to justify it by saying, quote, all companies play games with the county.
I never said that to him, and he knows that.
Why would these chief financial officers, what you're saying is they committed the fraud? For what reason?
I certainly didn't commit the fraud. People know me. They know I wouldn't instruct somebody to do that.
What would be the motive of your CFOs to commit fraud?
I really don't want to get into the deal, but every one of them has a motive.
But then he did tell us what he believes motivated his CFOs to falsely inflate earnings.
Promotions, bonuses, stock options, an opportunity to make a lot of money. There's incentives in it, tremendous incentives. Power, greed. There's a lot of reasons for what they did. There was no motive for me to destroy a great company that I built, a company that I loved, my 4th child. There was no reason for me to do that.
He benefited more than anybody from this fraud. There's no question about it. 100 times fold.
Doug Jones, a former U.S. attorney in Birmingham, has filed a class action suit against Scrushy on behalf of stockholders who lost billions while Scrushy made hundreds of millions of dollars from the fraud. How?
In his stock options, his salaries, and his bonuses. And he has, for years, cultivated an image that this is my company. I'm the one that brought this company up. I have my finger on the pulse. I know everything that's going on in this company. I know the numbers.
I know all of that, he told me, but I'm not an accountant.
We used to have a whole version of that 60-minute interview, and they clipped it just about a piece. You guys see some elements of the fraud triangle and all that? All the motives and incentives, what he was firing off about his CFOs. Mike Wallace later brought up that it was all the same incentive that really Scrushy had.
I've forgotten
Yeah.
how that ended. How did that end? Did Scrushy get the blame?
I think Scrushy did end up doing some.
Everybody else, the other financial officers pled guilty and got some,
They got sentenced.
but he got the blame on it.
He did get some blame. The others turned state evidence against him. He ended up going to jail for, I think, just a short period of time. All of the chief financial officers went to jail as well. Scrushy's out. I think they're all out now. Scrushy's a preacher, apparently. He's an evangelist, yeah, preacher. Let me show you Weston Smith, too. He's an interesting guy.
went to jail and found God.
And that was the same Doug Jones.
Oh, is it? Now tell me about Doug Jones.
That prosecutor is now a senator.
For Alabama. He was the one who ran against Roy Moore.
Is that right?
Yeah, the guy who beat Roy Moore.
He was the prosecutor on it, I guess. Okay, this is Wes Smith. He was the last CFO in line. And he saw, and this was actually after Sarbanes. He saw Sarbanes coming. He knew they were gonna have to sign, CEO and CFO sign basically a statement of the certification. That's one of the things that Sarbanes brought to the table. You saw Scrushy saying, hey, that's the CFO's job. I'm Mr. CEO. I don't have to deal with that crap. These guys, they do it. I just got some information, looked good to me, and sign off on it. So that changed with Sarbanes. Now, the CFO and CEO have to sign very explicit statements. I've read the financial statements. We have controls. The financial statements are true and correct. Kind of some of the same things the auditors do. But, you know, he didn't really want to take a lot of accountability in that. Wes Smith saw Sarbanes coming, knew that he was going to have to sign as the CFO these statements. And if he signed something that was wrong, he knew they were wrong. He knew they didn't have controls. Were he to sign that, he'd do 20 years in prison and have to pay, you know, up to about $2 million per charge. So what did he do? He confronted Scrushy. What did Scrushy do? Manipulated, showed some charm, some charisma, pulled him back in. Look, we'll get through this, we'll fix it. Stay with me, we'll make this right, and sweep it all under the rug, and we'll move forward. Wes Smith went along with it. Went along with it for several more quarters before he just said, I can't do this anymore. He met the district attorney in a hotel room in Birmingham, turned over all the evidence after he kind of kept doing it for a little while, turned in Scrushy, and this is where it all blew up. So this was the whistleblower. He's the guy, he did prison time, spent some time in jail for what he did. He comes and speaks to our firm's senior auditors. Every year we have a big training. He'll come in, he'll tell his story, and he'll put up, it's pretty interesting, he'll put up on the screen like this, the financial statements. And he'll say, here were the fraudulent Health South financial statements. Tell me which of those accounts have the fraud in it. And our seniors will raise their hand in revenue and say, yeah. Accounts receivable, yeah, it's there too. And they'll, you know, they'll think of a few other places. And he'll say, fraud is in every account on the balance sheet and income statement except property, plant, and equipment. Every other account we hose with, we play with it to make it work. Must have been a pretty extensive fraud. Anyway, here's kind of what happened, some of it in his own words. Not all of it, but there's enough here to get the idea.
Public companies face a lot of pressure from Wall Street to make their quarterly earnings. I mean, every company on the exchange has that same type of pressure. We didn't handle it properly at Health South. We didn't handle it properly from the very beginning. The leadership of the company set the tone that simply we were going to meet or exceed Wall Street expectations and really never disappoint them, regardless of what reality was out there. So that mentality really drove every decision. We lost focus of really the long-term goals, the long-term objectives of the company, and everything became a very short-term focus. And in one quarter, we were close. We weren't quite at the number, but the number was very close. And at that point, the rationalization was we can make certain changes in estimates, certain changes in accounting estimates that would get us to that number, the magical Wall Street number. And the rationalization was it's not a lot of money, it's short term. Basically, we'll catch it up next quarter. We were going out and doing due diligence on other companies, and we started seeing a lot of the same types of accounting games that we were doing in terms of playing with their numbers.
Everybody else is
and to us, that was the old rationalization. Well, everybody does it. It's okay, which of course is another lie. So the fraud itself really began with these types of excuses, short-term excuses, blaming it on others in terms of this is the way industry operates. And it wasn't until later that the fraud was at multi-million-dollar levels that it became such a conscious attempt to keep that facade alive. But at that point in time, it became a situation of doing it out of fear of getting caught. Because as you can imagine, I mean, if you're reporting one set of numbers and reality is somewhere south of that, if you decided, well, we're going to report clean numbers, there's going to be lots of questions. Well, what happened? You know, what happened to your internal activities? So it became a sense of keeping the fraud alive, because if we didn't, stopping would reveal the fraud itself. The tipping point for me really was the passage of the Sarbanes-Oxley Act. And in that rule, it requires that the CEO and CFO of public companies sign an attestation statement saying that their numbers are valid. And obviously, for me, that was a great big lie, and it had serious consequences. That was really the tipping point of saying enough. I've been living a lie for years. This is a whole new chalk line that I'm being asked to step over. And I mean, it was the slap in the face of, you know, enough is enough. It's time to bring this to an end. And eventually, it was a series of events, but I finally decided to do the right thing and basically bring it in to the fraud and exposed it to the federal government. There was a secret meeting that was arranged, and I exposed the fraud. And I didn't have a promise of immunity or a deal or anything like that. I mean, I did serve time, talked about before. But I remember leaving that meeting that night with a sense of fear, of course, but also with an absolute sense of relief of, thank God, you know, the lying is over. It's time to move forward in a truthful manner. And today, you know, from the world's perspectives, you know, financially, I'm starting over again, and life is quite different, much more modest than it was back then. But I can most assuredly tell you that life is so much better today. I have more joy and peace in my life today than I ever had back then when I was committing a rich lie.
So Weston told me when I saw him last year that he actually thought he was afraid of screw sheet. He said there were other cases where some people had crossed screw sheet and they mysteriously ended up dead. He thought that was going to be him next. But like I said, you know, screw sheet's out of jail now. He's a minister somewhere, probably in Alabama, doing whatever he does. But there's a situation where you had CFOs who had too much power and authority, getting a bit of a sense of pressure from the top, from the CEO, somewhat of a level of override. Go ahead and fix this, meet the expectations, let's make sure we can get there. But you know, let's focus in on, keep in mind that there's a lot of elements of the fraud triangle there that give way to why we have to have the COSO model. Within that COSO model, we have the control activities, but really kind of brings home the segregation of duties issue. Where we can take a very simple approach, or we can take a really extreme approach. If you've got a small company, and this is what the textbook will tell you, if you're getting tested on the CPA exam, it'll focus on this really simple model. At a very minimum, you want to separate three duties. Authorization, which is a control in that list of the 6 controls I have. The other 2 are just more processes in nature. Custody means I can get to the cash. The mail comes to my desk and I open it, there's checks from customers. I can get the check stock, you know, the series of checks that are blank, out of a cabinet. I can go and run those through the printer. The printer puts the information on it, puts the treasurer's signature down at the bottom. I can wire money from account to account. All of those are good examples of what custody is. Custody is just a process. And keep in mind, putting a signature on a check is not authorization. Putting a signature on a check is custody, because you're taking an ordinary piece of paper and you're converting it to a negotiable instrument. You're in effect making it cash. So that's what that signature entails. That is custody. If you back it up, the authorization was way further in the chain. If you think about SUA, that authorization happened when somebody said, let's go order some footballs. You called up whoever that manufacturer was, I don't recall. You guys remember who that was? What was it? Sorry? Velocity, yeah. So let's call Velocity. Let's get 1,000 footballs. You guys are trying to forget this name. And somebody signed a purchase order. So whoever of Jim or Nancy or Ray that were authorized to sign that purchase order, that was the person that did the act of authorization. It tends to be closer to the beginning or the boundary of the transaction. Transaction hasn't happened yet, but it's started. We want footballs, we need footballs. Jim can authorize footballs. Jim gets a purchase order together and emails it or sends it, wires it, whatever he does, gets it over to Velocity. That's the authorization. Then, who signed the checks? Remember?
Ray.
Ray signs the check. So then, when Ray runs the checks, you guys did it by hand, he's going back and looking to see, well, is there a purchase order here? Did we receive the footballs? Is there an invoice? So he's checking it out before he'll sign that check, but in effect, when he signs the check, he's turning that piece of paper into cash. He's paying Velocity $10,000, whatever it is. Okay, that's custody, and then, Nancy probably recorded it in the general ledger, recorded it to the purchasing journal, cash disbursements journal, brought those up to the general ledger. That's recorded. So at the very minimum, and this will be your next case, you'll be able to kind of take all the flow charts and figure out, do an analysis to determine whether or not, in a simple method, there was segregation of duties between those two parties. And you can tell me if you think it's a good level of duty separation or if you've got some conflicting duties. That will be your next case that's coming up. All right, so think of authorization like beginning of a transaction, somebody with authority saying, let's do it. Let's buy the stuff. Let's enter into a contract with a customer. Let's enter into that lease with the landlord, whatever. That's authorization. Custody is wiring funds, moving electronic cash, signing checks, having access to the bank accounts. That's all custody. That also could be inventory as well. Those people out in the warehouse that can touch the inventory, they have custody as well. Reporting are the accountants that can get into the general ledger system. They can post to sales journals, purchasing journals, payroll journals, sub-ledgers, the general ledger. Those are the people that have the recording abilities. All right, custody and recording are just mere processes that occur. They in and of themselves are not in control. They're not designed to prevent or detect errors. They in fact, the two processes here could cause errors. If somebody moves cash to the wrong place, that could cause an error. Report it to the wrong account, that could cause an error. But authorization is set to stop transactions that a company doesn't want to get involved in. All right, so the base level, straight from the textbook, you would segregate those three duties in a small company like Open Sports. But then you get to like, I don't know, Disney or eBay or Ford Motor Company. You got tens of thousands of employees out there having all of these different duties. So I expand this to kind of a real world scenario. If you go to work for any size of an organization and you're the accountant, they're going to say, hey, go figure out segregation of duties. I don't want you to think about it in that little capsule of 3. It's got to be a lot more. You have a lot more employees to deal with and to work with, you can expand it greatly. So I'm going to add a few. So in a simple version, it's authorization, custody, and reported. Those are all here, but now we're going to extend it, add some other controls that need to be in play, and segregate those as well. So we start with initiation. Initiation starts at the boundary. It's when you're starting to negotiate with the outside world. You and a customer are talking about how much you're going to sell a machine to them for. You and employees are deciding, they're not employees yet, you're deciding whether to hire them or not. You and vendors are talking about negotiating pricing for volume discounts. That's all initiation. So you're just starting a transaction, but the transaction hasn't completed yet. Okay, then that's usually where authorization hits. Your first control, like we said. So yeah, we want to buy the footballs. That's initiation, starting to talk to velocity. Authorization is okay, let's do it. Jim says let's do it. Puts it on a purchase order. Processing is going on where you're gathering all these documents. You're processing the purchase order. It's signed and authorized now. It gets mailed. Stuff comes in the back door. Somebody fills out a receiving report. Invoice comes in through the mail from Velocity. Somebody in accounting is processing all this information. And at some point when it all comes together and you have a transaction, we ordered it, it got shipped, we received it, we owe it. Now you got a recording event and Nancy's gonna record that. That's a process, so no more controls yet since authorization. The custody then is the cash. It's kind of two things. It's the inventory coming in to the warehouse. It's the cash going out. It's going to be Ray signing that check and sending it to Velocity. It's all custody. Then you have a reconciliation. If somebody in the organization is going to be the one that kind of makes sure that all those documents tie out. Purchase order, we ordered it. Receiving report, we got it. Invoice, the vendor acknowledges that they're charging us a certain price for these items. So somebody's reconciling all of those documents to say, yep, this was a good transaction, it was authorized, and we're okay to pay it. Then somebody's got to review that order. Somebody going back in and saying, okay, for everything that every disbursement that went out the door, is there a valid packet of information that somebody tied out, reconciled? Somebody might look at the expenses every month and say, wow, why did that happen? Why did our utility bill go from $3,000 a month to $10,000 a month? That's a pretty good sign of fraud. Somebody starts playing with accounts like that. They may be stealing money. They may be getting a check cut to themselves for, $7,000. Maybe it's Nancy, figures out how to get the checks. She puts it to utility expense, thinking no one's going to see it. But Jim comes back along later and says, wait a minute, utilities is up $8,000, I don't get there, $7,000, I don't get that. Looks into it, sees that there was a check cut to some strange company. That's Nancy's company. She stole money from the company. So somebody along the line has to kind of, at the end of it all, go back and look at it, tie it to detail, pull supporting documentation like invoices, make a determination whether there's been a mistake made or some frauds occurred. That's the last control that tends to be in play. Looking at reconciliations, reviewing them, tying things to detail, asking if something makes sense or not, investigating it if it doesn't. That's how most fraud and errors of any size tend to get detected at the end of the process. Okay, so there's only two controls in the extended duties, authorization and that review of reconciliations, the analysis, and so forth. All the rest of it, those duties are just processes that are occurring. So we'd want to have different people working through all of these. Well, that might be difficult at a company like Warren Sports that only has 3. It would be a lot easier for a major, like Spalding, makes a lot of different pieces of sporting equipment. You think golf balls and golf clubs to tennis balls and football. They would likely have a more expanded version of this to fit the coast of people a little better. So my notion here is add more duties, segregate those duties. Should not be the same person for any one of these, what have I got here, 8. Shouldn't be more than one person in each of these. Should be no crossover. So what that does is it makes it so that somebody starts getting into a transaction, they're not authorizing their own contract that they're working through with the customer, because they have incentive, right? A salesperson wants to get that commission. That's the incentive, it's built in. Nothing you can do about that. So given there's a risk there, we have another party, a vice president of something, sales, maybe just not commission, come back in and say, nah, we looked at the customer's credit, that's not a good customer. They're probably not going to pay us. Let's not get at that deal. Okay, so you have one person, a salesperson initiating, another person, the vice president of sales, authorizing, rejecting. If it goes through, then all of a sudden we're making sure we get the shipping taken care of. Somebody's invoicing that customer. All of that's happening until we get to a recording event where somebody in accounting, maybe the system's probably just doing this at that point. It's built in. If we have proper authorization, including a credit check, and something triggers that shipping went out, the system then comes in and books to the sales journal, and thus books to the general ledger. So, just put your notes, recording could be, and most likely is automated. Most of these things would be somewhat automated with some human intervention. Then you'd have the custody would be waiting for that check to come in from that customer. That check would usually be handled by the mailroom. The mailroom would sort through the checks, create the cash pre-list that you saw in the Warren Sports episode. The pre-list would go to accounting. The checks would go to the bank. There'd be a bank deposit created. That custody piece would probably just stay within the mailroom. And then the only thing that would go to the accountants would be the pre-list, so they could record. So custody and recording in the sales department might be a little bit flipped. Custody takes place first. Then the recording occurs based on the pre-list that goes up to accounting. Somebody comes back and reconciles to make sure that all shipments have a valid sales order, invoice, and collected. Some level of reconciliation. May go the other way. Any sale that was reported has valid supporting documentation. Anything that was ordered comes through the wire, shipped, invoice, collected.
Can you ever have an instance, say, where the two control processes, maybe the authorization, the review, and analysis is done by the same person, or they always have to be done by
better if
people?
they're different, but worst case, those two could be combined. There's not a whole lot that somebody could do if they were both on the front of the transaction and the end, but what could happen is they may not see their own mistake. Or they grant credit to somebody up front, and then they don't pay, and they're going to lose their jobs, and maybe more incentivized to make it go away, or just not call attention to it at the end of the transaction. So better if we segregate those people, get a final objective look at everything. What kind of crap is this guy approving at the front, right?
Yeah.
Better if you do that, but not the end of the world. Less risk here, right, than having the same person with custody and recording, for instance. That's probably your most severe risk of all when it comes to theft. Good question. Okay, so let's take this to practice. If you go to, I've posted something for you to just see it pop up in the segment 1 materials, test 1 materials, whatever I call it. There's some spreadsheet called seg, it's like abbreviated seg risk-seg duties new. And the slide I just went over is under brief. It doesn't have the COSO cube, I just added that. It's got everything else. But the next tab is a little exercise we can do together over the course of about the next 20 minutes. And this is where you can take to practice that more extended version and think about it in a payroll setting. Everybody found that? Raise your hand if you don't have that yet. Don't be shy. I'll make fun of you.
What was it called again?
So it's called,
It's risk-seg DTS.
yeah, it's right here at the top. You can read that.
Oh, gotcha. Thank you.
And that should just be right in your test 1 materials. Pull that up. I'm going to have you do some, I've got objective 1 through 5 here we can talk about. All right, so objective 1, see if you can figure out how to sequence the payroll activities. So all the activities I have in row D are jumbled. So your first exercise, just to kind of test your knowledge of how payroll works after having done SUA, even though I didn't have all of these, but you can kind of surmise, just take and put in order. If the employees are signing documents, and that's the very first thing to happen in all these things, just put a 1 there. If Jerry reconciling the bank statements, number 2, it's not. But that's what you do. And then you just kind of filter and sort these, get them in order. So that's the first thing you do. Put numbers in sequence, filter the numbers, sort them 1 to whatever. And that's number 1. Number 2, objective 2, would be to go to the duties and label a duty for each activity. So I'll give you the first one. All hourly employees punching into a time clock is just processing. All we're doing when we process is like move papers around, gather and collect information, input information into a database, run an executable file or do some processing. That's all processing. So that's a good example of what I want you to do in the duties. You're not going to be exact here. We'll talk about kind of a preferred solution. This is not an exact science. That's objective 2. Then, once you've done that, and you get all the duties in place, you can step back and say, all right, there's a bunch of people here. There's like a Bob and a Uma and a Macy, all these weird names I put in there. Does any one person have more than one duty that they should have? And that'll be easy to see once you've got all this in place. There's a missing control. I've left a control out that should be here. I want you to try to find that one. Just use your smarts. Again, you guys maybe don't have a lot of experience here, but you have good intuition. Use your intuition. And then talk about risks. So for 3 and 4, there's a conflicting duty and a missing control. What kind of crud could happen here? What's the bad stuff that could happen because there's a missing duty and a conflicting duty? Okay, I think this will be kind of fun for you. So spend about 10 or 15 minutes going through this as a group. Work with somebody from, you got a group member, work with that person. Come up with your best 2-person solution to this. I'll walk around, you can ask me questions. See if you can segregate duties.
Yeah, I have that too, but then I found that like supervisors are the first signature to hire approval, like to hire somebody. And then there's the second signature, and then the third is the person checks for authorization of the new hires. And then the position is posted, and then the person screens it. But I might be wrong. position of new hires. Sitting in the shoes, probably like the HR person. Where she posted the position out there once it's been authorized, since the first two authorized it.
Right now here since my review is the ordinance get approved after, over review and approved. No, Jerry, he approved. Question, so, would someone review the payroll register happen before someone makes the actual journal entry?
Sometimes before, sometimes it's after, it's just a matter of preference.
Okay.
I like it after just to make sure that no mistakes are made, because if it gets posted and nobody
And then
checks
the
it out.
person's screened by HR.
So,
And
if we
then
wouldn't
I
review
said
the
that
approved,
somebody's like
when Mike
selected
reviews the
offered a
payroll
letter
register
is not
approved,
in
so we
there.
probably go Mike approve payroll register, Jerry makes the entry, and then the.
I would agree with that. Yeah, because Mike,
And then the next thing, the first thing you do for most employees is you sign documents authorizing
employees
you
to be at 120 hours.
know, you fill out your W-2s.
And then if they rather than have to make it, so, okay.
Yes.
Okay,
So you do 9, Mike do 9, Jerry's 10.
now we're at the payroll part. Let's see what's that. Oh, the first one.
Okay.
Yeah, pensions with time off.
This supervisor's review and approve. So that would be 8.
Johnny is the date of the payroll tax that may be sometime soon. Okay. And just, I put an N or something or random letter just saying something about it. And reviews the payroll register and approves. That's probably gonna be all for this one. Okay, Sue sends it to Bethany. Supervisors review and approve time cards. Ooh, I think that's before. I think that's like the next one. Like I think that's 8, and then I think that Johnny used the database designated. That's how it was in Goldman, I guess I'm just keeping to that one, it's like Goldman, was like, so we always put and then our supervisor for it to even be like, for our check, our supervisor would have to approve it. Just be like, yeah, that's on it, and then somebody collects all the data in his yeah, so I'd say Johnny number 9. And then as Johnny uses to calculate the payroll. I wonder where Mike is though. Mike reviews maybe Johnny's not there. Maybe it goes supervisors review and approve time cards. Mike reviews payroll register and approves, and then Johnny uses the database. Johnny might get 10. What do you think? I think the payroll register, maybe he's like one of the bigger bosses. Like all the supervisors, maybe I have to get my like pay raise. Honestly, some of the presentation is wrong. I'm just going to understand that. Johnny is just like for employees. That's the most recent one. And then top. James and payroll check. Jerry reconciled the big statement of cash account. Quick question. Uma reviewed financial journal entry. I think that's correct. So I think the next one is Jerry enters journal entry based on Johnny's calculation.
Employees authorization.
So
Okay.
this check says nothing to do with the check.
Yes, all the.
Right, she's comparing so she's
Oh yeah, I like that. Yeah, that's cool. Do that. 12 there.
making sure they clarify this tax. Okay. So we can't do that until. Second question,
HR screen candidates and like, anything that's first, all those are review and analysis.
some,
And then,
they all have to.
so, I don't know if that's a trick or not, but.
Yeah, I think that's it. Right? Jane signs the check. Oh wait, wait, wait. What is the ETF file to bank? Say sends the ETF file to bank.
Then authorization of the employee to sign authorize.
What's going on? Okay, that's like direct deposit. Is that Sue?
Yes.
So she basically has like a program that pulls out all the payroll information, matches it up with everybody's ACH routing, and that just gets it ready and then it's supposed to be. And then the bank takes it and moves it around.
So how come the Bob's handing checks out to the employees then?
What's that?
It sounds like they're getting direct deposit.
It's both, right? So some employees want to get a check. Maybe 10% of the employees want to have that check. Maybe they're like, haven't got their citizenship cleared yet, or can't get a bank account for some reason, or hiding it from their wife, whatever, right? So maybe 10% of the population. Everybody else is getting direct deposit.
So the EFT and the handing checks out are basically
Simultaneous.
either one could be before the other. They're going to be read at the same time.
Yeah.
Okay.
Or you could like have 80% of your salary go into direct deposit and 20% go into your own check.
So your wife doesn't know about
Go to
it.
Vegas.
Would that be
Mama doesn't know money.
Would that be then like at the same time, like the Sue sends the ETF file to bank at the same time Bob is
Yeah, there's no real
handing out
order.
checks?
There's no particular order. It happens. It kind of happens at the same time. It's ready to be cut.
Okay, so first is like, so Alan's ETF file to bank. So Jane signed it at 13. And then
Good, sometimes
14
more
or
get
15.
them reporting when
Sue
you
sent email sending, and then 14 or 15 is Bob. All we have to make sure is that somebody signs the check before the check is out. And then the very last thing is Jerry files bank secret. Sweet. So I'm seeing that we're sitting around for water.
Well, my thing is, I'm having a hard time with this one. Check for authorization of raises. I can't tell if that's supposed to happen like right after we hire them, or if that's like.
I put it right after I hired them because of the new hires.
Yeah.
Now we gotta do that. Okay.
So like, let's see, supervisor first signature on the new hire approval forms. So I would say 3,
I
then
think like steps 1, 2,
3, then maybe 4, and then per. Employee signed documents authorizing withholdings. That's gonna be part of your new hire paperwork. So I think that's gonna happen before. So yeah, I think maybe that should be 6 is what I'm
and
thinking.
the authorization of the inspection, right?
What do you have?
Well, I had all hourly employees punch into a time clock, but now I think that it should be Macy Cape's files and checks for authorization of new hires.
Could be initiation of process.
So what's your 4?
Checks the
Always
file.
vice president signs the second signature on new hire approval forms.
Okay.
Well, and then
3
the
supervisor
HR
first,
person
first
actually
signature.
signs and it's recorded.
HR screens candidates, HR posting position. What about employees signed documents authorizing withholdings? When you start working somewhere, before you actually get hired, right? You have to sign all your stuff. So I think that
I was
has to be
thinking
there
that
somewhere.
was after the payroll was calculated.
Somebody's offered a letter, that
No.
would be more like
That's-
custody.
That has to happen with your new employee paperwork.
Like that's when. I don't know. 1, 2,
let's go.
6, employee signs document authorizing withholding. I'd say that's an authorization thing, right? Or
Otherwise, number 8. Oh, I did 8.
let's think
The supervisor's
employee
review
signs
and
document
approval.
authorizing withholding.
I
But
have.
authorizing that they're being held. But at the same time,
Alright, so there's
huh?
the supervisor's review for time cards. Or the first,
1, 2,
new hire. And vice president, so that's not.
Who's in that? There's only, what, 7 options to pick from, and there's 17 things or something. You know what I mean? I don't think that
Share the interim and journal entry and also reconcile.
what is this for the duties?
yeah.
Can there be like multiple things that are relatively similar?
And Jeremy makes a final
And
decision.
You
then,
can have processing on there several times, for instance.
okay.
A lot of different, authorizations.
Okay.
Only a few pieces of custody in there, kind of concentrated around one thing that happens, checks go out.
Like signing.
Initiation will happen at first, but then kind of goes away.
Right. And we put as one of the things that is missing is like somebody's actually operating off the
Not really a control, but it's maybe a process that's missing.
Yeah.
Somebody calls them and says, hey, just come work with us. That's a good point. That looks good. God believe.
Oh,
Well,
I'm glad it's over.
No doubt. So why do you still have the book if it's over?
Because the first day of class, I didn't have my book yet because I ordered them on Amazon. And so JB had an extra and he let me borrow it. Yeah, oh yeah, it was awesome. Yeah, so he let me borrow that and I haven't given it back.
Returning it.
So he's got a class to do, so I'm going to drop it off in class.
Now tell him what a good human being is.
He is. He saved me a couple $100, so. So Tim, 10, I'm going Mike reviews the payroll ready. That's what I'm thinking.
Okay, let's just think from the top. All hourly employees pension to a time clock. So that would be recording. To do recording just that. Right? Or would that be a process in order for them to do the recording step? No, I think it's recording, personally. And then I think that when somebody hands out checks to an employee, that's kind of like the reconciliation part. It's a process.
Or just a process meeting?
Yeah, it's a process.
That's why you just reconcile it, but there's no reconciliation on the issue.
Well, I feel like yeah.
Because yeah, you go here, you go to reconcile, you go. Right, so it's reconciliation.
Employee signs documents authorizing process?
Is that what you got?
There's reconciliation, there's process.
Right, yeah, I have either or in my opinion. Jerry enters journal entry based on
So you reconcile.
Put her name in that.
no, signing what you got, like,
How are we doing?
Control.
it's the last 3.
Yeah, so go back to the brief.
Where are you seeing?
Like, for example, Sue sends the OT file to the bank who approved.
Go back to.
Are any
would
use a
say was
database to
maybe
calculate payroll
over the
process, right?
Well, she's approving the journal entry,
So,
but then Susan a request.
I said that was process, but
is based on that
the
entry.
reporting.
Right, on the entry.
Okay.
Like,
Mike reviews the payroll reconciliation through.
Journal entry.
He's reconciling, he's reviewing it.
Yeah.
Like she could change amounts of
Yes.
checks.
I think he's
But still
do that.
reconcile at the end.
No one's reviewing the
Pretty open.
That's right.
Let's give it more.
They never have a problem.
But yeah, someone make sure that someone places their checks.
That fell.
Same match.
Only person gets that. And supervisors review it and approve time cards.
So even if you don't
Problem
review,
is that.
So the person processed it, I would say that's like, just reviewing and approving would be the same as the other
I think
reporting.
we still, I think we need to both reviews done.
Which was what? Review and approve, yeah.
Yeah, but the only problem is that.
UMA reviews and approves, I would say the same.
We have a question about the distinction between authorization.
Which is why you need someone
Oh,
to
and
announce.
then
Good question. Authorization.
No, but but like Jay.
Whereas,
The only person contacting the bank is so before Sue goes straight to the bank, it needs someone else. Yes. Because otherwise she would be just like paying someone extra.
And then, oh, sorry, JSX payroll check and time.
Sir. So, and I'm not saying that my order's right here, but based on my order. So remember at step 11, I'm saying Jerry enters a journal entry based on Johnny's calculation. And then for 12, I'm saying UMA reviews and approves the payroll journal entry. And so I'm going from recording under Jerry enters a journal entry. I think that's recording. And then she's authorizing. So can we go backwards and can I call that authorization? UMA reviews and approves the payroll journal.
usually it's a reconciliation, but, you know, this one right here.
So
maybe this should be later on in the cycle, or can you?
It could be before, or it could be after. It's usually better if it's after, so that she picks up any errors.
Right.
He could give it to her and say, I want to make this journal entry, and she could review it before. Then she'd have to assume that he did it right, but he punched it in.
Right.
So it's better if it's done after.
Done afterwards. These don't necessarily, or maybe my order's wrong. Maybe that's tipping me off. But so these don't necessarily have to go exactly in this order.
No,
Then you could go
but these two tend to be at the first of a transaction.
right initiation.
And those two tend to be toward the back, and everything else could be jumbled up.
So this is going to be more of a review, analysis, approve.
Yeah.
12. Okay. Exactly.
No, Sue's 13. Sue's 13.
So like UMA reviews the payroll journal entry. Not necessarily though, because she would be making the amount. She would be changing.
Yeah, this would toss my idea.
Journal entry.
See what she's saying basically is Jane takes it back and just authorizes each check. It doesn't mention Jane
Like no one's
reviewing
between
or
Sue and the
approving.
bank.
No, yeah, no one's reviewing Sue's transfer to the bank. And then no one's reviewing Jane's checks.
So someone should be approving these.
And then someone should be reviewing Jane's checks.
What if Sue's husband works for the company?
Well, like doing a bank rec, you're kind of doing that, right? Because all the cash that left the bank is going to be checks that were written and that he has
Let's
to
get that
Oh,
Jerry
the bank rec is doing basically the
That's
opposite.
kind of checking.
It's checking Jane's.
Unions will left the bank. In essence, there's some of that, but it would be there. You would still reconcile.
All right, dude. Let's compare notes.
He seems to
Right?
have access to the journal.
So it would be better if somebody
He enters the journal entry and then he writes.
would say, those people are.
Right. And then like the payroll check.
There's not really a result for operations. Because so many things happen in emergency. It's not a verse. So what did you put? And then the rest of
I'm just thinking, if you make the journal entry, maybe it's like after
yeah, there would be a
and he double checks the suits.
Alright, you guys getting close?
Yeah, I think she could do it.
Okay, wrap it up, we're next about a minute and a half.
Yeah.
He would get the same for that.
Yeah, she could add a line item on the check.
But would that one affect the, I would just affect the misappropriation functions?
She could like add like other as a line item on the check.
Partly,
You know how there's like, there would be like wages, tax, federal tax, state tax, and then she, and you know, there's like overtime, and there's different things. So she could just write other. And like, let her know, and they might not catch all of the journal because it's just other. It's not, that makes sense.
this? What is the first thing that happens in these events?
HR posts a new position. I'll take that one because it was easy.
Before you guys, somebody said there was something else that might happen, right? Yeah, somebody says, hey, we need a new staff accountant, or
That's
whatever.
not on here.
So I left that one out. Not intentionally, not a huge deal. Okay, what else? What happens next? Number 2.
Screen cam.
Yeah, so HR says, okay, you're a loser, don't come in, but you got a great resume, come in. Guess that's what they do, I don't know. Okay, what happens next?
Supervisors are the first signature.
Yeah, there's a bunch of interviews that go on. The supervisor says, this is the person we want in our department. I'm gonna put them up. Then what happens?
Vice president.
You usually gotta get approval from, authorization from one of their people that's over them. Okay, now we have an authorization of a brand new baby employee. What happens next?
Employees sign documents.
Okay, they've got some, W-4 forms, right? What's a W-4 form? You learned that in tax? Yeah, so here's the stuff. Duplication, there's a control problem. Here's all of the money or percentages you can take out of my payroll and give to the federal government, the state government, 401k plan, the health insurance company, my baby mama, whatever, right? You guys know what I'm talking about. Okay. What's number 6?
That's a great question.
Okay, Mason's gonna take all this stuff we got so far and probably gonna have a big database. He puts it into. Good. What's next? What's 7?
Employees function to time off.
Yeah, they're hired now and they're ready to work, so they might as well work. And this is gonna be just those that are labor employees, right? Wage employees. You gotta keep track of their time, where the salaried employees wouldn't have to punch in. They might, like in my business, we kinda have to keep our time, that's what I bill. But that's different. Most employees that are salaried just have to show up and not get fired, and then they get a paycheck. What's 8? Okay, then those time cards, like every so often someone gets in the payroll system. Who's doing this?
Supervisors.
Oh, down here. And that was 8. Okay, so yeah, they're gonna look at it and go, wait a minute, why did Jenny work 120 hours this week? There's no way she would have passed out. That doesn't make sense. So just kind of checking in, or who's John? Where did he come from? I don't remember hiring a John in my apartment. Why are we paying John $80,000 a year? Makes no sense. That's what's going on there. What's number 9? Now we're ready to crunch the numbers, right? So who's doing that?
Johnny.
Yeah, there's John. He lives. He's real. So Johnny has some kind of a payroll system that is probably interlinked with the HR system and the timekeeping system. It pulls in the data. You put in this is the next pay period. Figures out everyone's withholdings, and tax rates, and all of that jargon to determine what the journal entry is going to be, and what paychecks have to go out, and what reports got to be run for taxes and government, all that good stuff. Okay, what's 10? Mike. Okay, this could happen in this order. If you did something different, it might be okay, but somewhere along here, Mike's going to say, here's everybody, and he'll do kind of a review too, right? Where he'll go, why was payroll $80,000 this period and it was only 40? Whoops, the system had a glitch, it double ran everything. We don't want to send out paychecks because this is double. Everyone would think they're getting a big bonus and they'll deserve it. Let's fix it. That's a good time to do it before the checks get cut, before the journal entry gets made. That's what Mike's doing. What happens next? What's 11?
Jerry enters the journal
might be a good time for a journal entry. So he's gonna take that payroll register, figure out the timing. Those people could have worked the pay period over a cutoff period. In other words, let's say it's January 8th, and you got a pay period. Maybe only 8 days are into the new period, and there's a whole nother part of a week back in the December period. From a cutoff perspective, we have a payable at the end of the year. No cash is left until January 8th, so we might have like a payroll liability against payroll expense. We got to make sure the expenses get in the right period. So that's usually what's happening there. It's trying to get the timing and the cutoff correct, getting it in the right period, the right amount. And then who comes along? Uma. Uma's going to make sure, probably pull the payroll registers, check it against the journal entry, make sure it's right, take one last check, and then we're probably ready to pay some people at that point. Okay, so what happens now? Sue could be next, or Bob, you know, some checks get cut, Bob could be somewhere in here.
Doesn't Jane have to
Jane's
sign
gotta
payroll
sign
checks
it
first?
just like you said. Thanks for catching me on that. Okay, then what happens? It's like one left, right? So then somebody brings it all home. We have a, you know, a good payroll payroll register says everyone was supposed to get paid, the net pay that was supposed to go out, the check that was supposed to go to the government. They can check that against the bank. You know, what left the bank? We can go back and look at Sue's work if we wanted to, kind of check it out. So a lot of reconciliation that can go on here with Jerry. Especially if, and you guys are kind of toying with this, like if Sue were to add another 5 line items, all of which were her ACH number, Jerry would need to do a little bit more than just a bank rec. You may want to go in and say, okay, what did she say? Let me get the detail. Does it match to the payroll register? Why are there 5 more entries for $5,000 each going to the same bank account? She's committing fraud. Don't ever do this, by the way. People do this, but don't do it. Jerry would have to be the guy that figures that out. Okay, so now that we have these, in the interest of time, kind of cutting it short, let me just see if I can remember all my Excel functions. And let's sort these. Real quick, what are the duties? What's this posting? Initiation, good. What's the screening? Could be initiation, could be processing, we'll call it initiation. Not a perfect science, but you'll get the idea. Signatures by supervisor, and the vice presidents, and the employees. See how this is kind of lining up now? But then it gets a little bit jumpy. Now what's Macy doing? Okay, nothing recorded until we actually have something that's going to hit the general journal, right? Nothing's hitting the journal yet. So all Macy's doing is some processing. Same with the time clock, it's gathering information. But now we stop and do what? We'll review. And then we do what with the database? Big number crunching and processing. And then we have what? Another stop check here. Another review. And then we finally record something. Not until this point, all this shuffling around and approvals, and then we can actually record. Okay, then Uma's going to take a step back, another review. Then we got a whole bunch of custody going on here. And then a reconciliation. So, you might have something similar to that. Again, not a perfect science. Any questions on what you're seeing on the screen versus what you had on the written page? That you guys debated this. I kind of threw you into a deeper into the pool. Part of my strategy, right? Get you talking about it, thinking about it. It tends to stick better when you do that. But you can see that the initiation and authorization happen right up front. Kind of the master reconciliation tends to be toward the end, with a little bit of some checks along the way and some mini approvals. And that just means let's stop, look at it, and decide if we're going to proceed or not. Let's not get anything in the journals or ledgers unless we think it's right. Let's not send checks out until we think it's right. And then a big reconciliation, all the cash that left the bank should have, everything that got put in the accounts, got put in the right way. So who has the conflicting duties? And what's the missing control? There's a few, maybe missing process of controls, but what's the big master control that's missing? We'll start there. A few of you caught this. You guys pick right up on it. What is it?
The review of the reconciliation.
Okay, so blank reviews the, can I spell? The recon for anomalies and errors. So this is where if jury was in collusion with somebody, might kind of have a reconciling item that just says irreconcilable difference 30,000, right? Because he's conspiring with Sue. He and Sue are dating. Sue's figuring out how to get money away from the accounts. He's just making it reconcile away. That would be a good way to collude. So we might want somebody else, maybe somebody like Uma, come back along and do one more check. Good job. You guys found it right in front of my eyes. I'm standing by. That's a good review control, an analysis control. Who has the conflicting duty? Jerry does what? Jerry's back here, he posts it, and if he fat fingers it, right, he's going to reconcile it, and he's either going to cover it up because he doesn't want to be embarrassed, or he's just going to miss it because he created the error and he's too lazy to figure it out, or thinks that my work's got to be right. Of course it's going to reconcile. So we either want to segregate that, or that's another reason to put Uma down here. If we did let him do those two things, we want to have a real heavy review on top of it. But I would recommend getting somebody else to do the reconciliation. All right. That makes sense to you guys? You comfortable with this? When I pass back your SUA assignments, your next case will be doing this kind of a thing with your SUA. But you don't have it, so you can't do it. So I'm not going to introduce you to that case yet. It's pretty simple. I'm going to do an analysis on segregation of duties. I want to change it around a little bit. I think I made it a little too intense last time. I want to simplify it for you, just to get you a good experience of taking those flow charts. Now, if you kept the flow charts, I guess we could do this without handing the entire thing back. Did you guys keep the booklet that had it on each turn of the flow charts?
Yeah, the flow charts are turned in.
Because they've had some of the
Journal entries are at the back.
Okay, so we'll wait till you get that back, and then I'll just simplify this so that it's a better experience for you when you look at segregation of duties. So we'll put that on the back burner. Maybe tomorrow during the test, I'll rewrite that case and simplify it. I'll go through the SUAs I have left. I probably only have one. How many do I have left to get? Everybody turn your SUAs? They're there. I can correct them now. And I'll get those back shortly, first of next week. So tomorrow we've got the 40 multiple choice exam, and then you have a day off. I don't know what we're doing Thursday, but it's good. And I'll hope to have your SUAs back by Monday, and I'll introduce the next case. I think I've got probably at least half of the opinion cases back and graded, but I've muted that so you can't see what you got. Waiting to see how the other ones did to curve it out, get you guys all centered around a B plus on average. Unless you all do super good, then I'll center it around an A minus. So if you haven't finished that case, do it as quickly as you can so I can finish grading that. You can get an idea of how I grade it. Is that fair enough? Now that the SUA is done, you got to study for the test, so maybe you should wait till Thursday for that. So you can study for the test. All right, any other questions